Now, a few things have happened. In late 2008, the last quarter, we had the GFC. We then had a lot of stimulus money pushed into the economy, and then there's been a lot of trouble with developers and people getting money from the banks. When will that start to ease, and how do you think the stimulus being withdrawn is going to impact moving forward, perhaps for the rest of this year and next year?
Well, I think we've got to remember in terms of financial events, it's always about fear and greed. And when you do have concerns about other parts of the world, there's a degree of fear that comes in. And the fear is expressed by bankers as well as everyone else. They're concerned about the property market overseas, and perhaps we're a little bit more reticent, perhaps doing a few more checks in terms of developers than what they did in the past. But the funds for developers, well, they're freely available. Certainly institutions like Commonwealth Bank have never had a problem in terms of funds available. They may have done a few more checks, they might want a few more pre-sales, but that's the sort of checks that you'd require from a bank that gives you confidence that a bank is actually doing the right thing.
So do you think that the fact that the banks, the basically 5 banks that are doing nearly all of the lending at the moment, we've lost a lot of the competitive nature, and there's a lot of talk about the government stepping in, the banks being greedy. What's your comment on that?
The competition certainly has picked up. If a bank like ANZ or Commonwealth Bank doesn't want to do a deal nowadays, there's a lot of smaller lenders who are now stepping up to the plate and saying we're ready to do business again.
Now, I hear that there's a fair bit of collaboration in terms of if you applied for a loan at one bank and then a second bank, the word in the street is that the banks get to know that you've been knocked back at one bank or 2 banks. So it is important to get that application correct in the first instance?
Well, it's always important that if you're putting an application in, that you're putting it in with all of the relevant details. All the things which a bank would require, and nowadays, so banks are looking at these applications much more closely. They want all the relevant details to be able to make the applications, but each bank is going to make its own decision on the loan. They're going to weigh up all the relevant criteria and then decide at the end of the day whether they believe that it's worth lending out the money. And of course, what they're taking into consideration, not just the health of the overall bank, but they're looking to make sure that if they lend it out to a particular individual or developer, whatever it happens to be, that they're going to be able to make it through. So they're looking out for the interest of that borrower, as well as people like their other customers and shareholders.
In the States, I went to the States and we found over there the banks and the valuations were severely impacting to the negative their pricing there, where the buyers were happy to pay more, but the valuers were valuing it less, so therefore the banks could not lend to them, to the money that they were prepared to pay. Now, a similar but a much lower level impact is happening here, where a client would go to a bank and the bank will actually talk them out of a purchase or talk them into a more conservative purchase. Is that likely to continue? Because that's that fear-greed relationship, isn't it?
Well, what banks do is assess the ability of an individual to be able to buy a property. So they look at their incomes, they look at their outgoings and their incomings in terms of wages, and they determine what their ability to be able to, what sort of property they're able to buy. And that's the main guidance that we provide, to say, well, okay, based on all those sorts of things, you can buy a home up to, say, $500,000. You can have a mortgage of, say, in the order of $400,000. And we do that with a degree of stress testing. So we take into account current interest rates, but we actually add a safety margin of around about up to 2 percentage points to make sure people can make those repayments going forward. We don't advise people to buy properties or not buy properties. We look at the criteria and say, this is what you can do. And I think that's the right approach. At the end of the day, the individual has to make the choice.
Have there been any permanent changes that you've seen in the finance world and relating to property from the global financial crisis that will be with us forever?
I don't know whether there's changes that will be with us forever. Forever is a long time, so I'm not about to make a judgment that so these sorts of things have happened.
But you're the guru, you can make those judgments.
Well, I can tell you about in the short to medium term, certainly it's the case that banks are going to be looking a whole lot more closely at the proposition. We had 2, 3, 4 years ago where effectively, not just here in Australia, but around the world, risk was thrown out the window to a greater extent in other parts of the world, but we have very, very strong financial regulation here in Australia, and that has held us in very, very good stead. I think it's a case now that we're looking much more closely at the propositions, probably a little bit more closely than we did, sort of in the past. But that is going to ease up over time. Time is the cure of all ills, and if we do get sort of more and more time passing between us and the global financial crisis, things get back to normal. But I don't think we're going to see a return to risky lending practices anytime soon.
Interesting to hear those thoughts from CommSec Chief Economist Craig James. Lou, interested to hear your thoughts. They're departing from conservative, heading back to conservative banking, I should say. I know you have some thoughts on that.
Well, I do, Tim. As you know, I've been personally involved in doing some banking arrangements myself, and no longer do we have the bank manager who knows your affairs and your family and so forth. And it really is that when you come to an application for some banking loans or whatever, that you really need to make sure you put everything in there, and knowing that it will be put in front of people who will just assess it on what they see in front of them.
They're going to tick boxes and just go through your assessment and say yes or no, or we need more information.
Well, that's right, and they obviously do look in a lot of detail to look at what you've put forward and what they predict.
Okay. Well, I tell you what, why don't we go and have a look now behind the blinds?